I am not a financial advisor, and I never give financial advice on this channel. 100% of this content is for entertainment purposes only. Hello everybody, hope you're all doing well. It's Lane here with MetaShackle. Today I'm going to be going over the Viewer's Choice video, in which ZBCN and Shiba Inu were the winners. Just in case you're not aware, Viewer's Choice is where I allow you, the viewer, to make some suggestions on cryptos in which I should chart out and cover. I then take the highest mentioned, the highest suggested cryptos and put them to a vote. The audience then votes upon those, and the winners get covered in a Viewer's Choice video. So today I'll be covering ZBCN and Shiba Inu using the 4-hour, the daily, as well as the heat maps. So let's not waste any more time and let's get into the video. First, taking a look at the ZBCN daily chart, you can see that we've formed this nice wedge pattern here. Price is currently trading below the equilibrium zone and just above this bullish BISI on the daily, which is centered at about that 31,439. We do have this nice bullish hidden divergence right here on the charts. These tend to not play out as well on longer term charts as well as on the shorter term charts. But you can see right here with this weak doji that there is in fact something going on in this area as soon as price got right to that divergence area. That doesn't mean that this is going to play out, but I think it's good to keep your eyes on it. We're also trading above the Gaussian channel. This is also something that I mentioned to my master tier members on Patreon. I went over this a few days ago. There's a volume imbalance that is formed down here right around that 2,900.5 level that has not been filled. I was telling them that I think it's very likely we could see price work down into this area and fill this imbalance before we see price reverse. We have this lower trend line right here that goes all the way back to late April when we first saw this big breakout of the handle of the cup and handle pattern that had formed on the charts, coming up and setting this new all-time high right here at roughly that 00717 range. Now flipping over to the 4-hour chart, you can see that we have that same volume imbalance marked out right here. And zooming in on the charts, you can actually see that we have quite a few other imbalances. Price is currently trading right down here within this bullish order block, which looks like it's very likely to get cracked. First, we have a gap right here centered at about that 0.0045 level, which is rather large. We also have a volume imbalance here at the 0.048 level. Then getting above the equilibrium zone, we also have two prevailing volume imbalances resting up here at the 0.00626 level, as well as the 0.065 level. ZBCN has a knack for filling volume imbalances and gaps, so it's very likely that all the gaps that you see on the chart are going to be filled at some point. But I think at this point it's far more likely that we're going to see the ones filled to the downside first. We are showing a bullish hidden divergence right here, as you can see down here on the stochastic, which is generally a sign of reversal. So we might see a move upwards here towards this upper trend line, perhaps even filling this gap. But as I mentioned to my Patreon members, I think it's very likely at some point we're going to break below this lower trend line, as well as this trend line, and we're going to come down here and fill this volume imbalance somewhere where these lines all correlate with this underlying prevailing trend line that we see here moving up, somewhere where these merge, perhaps out in this area. So I seriously doubt that ZBCN is going to leave this volume imbalance sitting here, moving to the upside. The algorithm functions first and foremost on efficiency, and it's going to be a lot easier for the algorithm to bring price down to this, filling this volume imbalance, gradually working its way back up, then taking out this gap and these volume imbalances here and here. So eventually at some point we should see the price pull up, breaking through the equilibrium zone, going on the attack for these volume imbalances and perhaps even setting a new all-time high. When taking a look at the liquidation heat map, you can see that the thickest band of liquidity on the entire chart has been taken out already here, but we have even more liquidity to the downside right here. We are building quite a bit of liquidity up here on the short side, But overall, the vast majority of liquidity, as you can see on this chart, remains clearly to the downside of this chart, with a decent concentration resting down here at about that 0.0023 range. If we come up in this range here, right about right here where this purple band is, this is where that volume imbalance is on the chart. So it's very likely at the least that we will probably come down and clear out most of this liquidity, taking out these previous lows that we see on the chart here and here. As being such a lack of liquidity on the charts, the algorithm is going to have to mop up the thickest bands while it can to gather that liquidity. Otherwise, there's a good chance that there could be a lot of inefficiency within the price, and generally the algorithm will try to avoid that, because the whole point of having this underlying algorithm running the markets is efficiency. And being something as low priced as ZBCN is, it wouldn't take too many wells trying to put orders in this area here, trying to mop up this liquidity at the same time, before we could see prices dropping considerably lower as a result, because it simply can't fill those orders, and price has no choice but to dig deeper to grab the liquidity it needs to do so. Taking a look at the ZBCN 30-day liquidation map, you can see current price here in the middle. The vast majority of the liquidity on this chart sits below current price with the long liquidation leverage, with a couple nice spikes here at about 38.38, one here at 37.98, and the biggest resting down here at about 36.62. But just a glance at this chart, you can see that the short liquidation leverage resting above current price is significantly less than what we have resting below current price, which means at this point odds are probably favoring going down and filling that volume imbalance rather than moving upwards. But if it does move upwards, it's probably fairly likely that it would get rejected at that upper trend line, as the vast majority of the liquidity required for price to continue moving efficiently rests below current price. I am a fan of ZBCN. I think it has a very bright future working with Ripple. I think it's still very early in regards to ZBCN. And if you were going to buy a crypto to hold long term that was at a low price, that has a lot of upside potential, this would be one of those. So it might be something that you want to look into, especially if we're about to see a time where price is going to go lower. So you might be able to ladder some buy orders in the right areas, start accumulating yourself a nice position moving forward. For additional information and exclusive perks, do consider joining me on Patreon. Now jumping over and taking a look at Shiba Inu, you can see that overall Shiba has performed very poorly, basically trending down, going back all the way to December. All of the gains that it made during the Trump pump have been completely wiped out, and it's trading well below that area. We also have this breakout point right here in this area, which is roughly at about 15 to 16% lower than current price. There is a good chance that at some point we could see price visit this area right here, which when you look at it on the charts would be right in this area just below that lower trend line. Taking a look at it, we are trading well below the equilibrium zone. Price is trading below the Gaussian channel. We do have a strong bullish divergence potentially forming on the charts right here, as you can see within the stochastics, which has the potential to be a bullish sign, assuming that it plays out and reverses correctly, moving up from here. We are trading at this bullish order block at the bottom of the pattern, and if there is a lack of liquidity on the charts, you could see this get filled with price bouncing off of this lower trend line, perhaps even a little bit lower towards that breakout point that I just mentioned, then moving up and challenging these bearish SHIBs as well as these bearish order blocks that are resting above current price. Ultimately, what we'd want to see on this daily chart is price getting up above this previous high here. That would be a good signal moving towards the equilibrium zone. But all in all, you can just take one look at this chart and see absolutely how poorly Shiba Inu has performed since December. But at the same time, these are the times that you want to start accumulating. As you can see what happens from looking at the chart, once we reach those lows, we get these incredible turnarounds. And at some point, It's probably very likely with this nice W shape that we have here that price will come up and at least challenge this high here, and if it breaks through that, may even attempt to challenge this high here, which could present some incredible gains. But pretty much anybody who's bought Shiba Inu since December has lost money. Now switching over to the 4-hour chart, what we're doing is we were looking at this overall pattern through here on the daily chart, but we've now zoomed in to this smaller last little wedge that's formed on the charts. The daily chart was going back to the December range through here, but this chart here is on this last little wedge that started to form in May. We have a bearish order block that's formed right up in this area at the 4015 range. Price is currently trading below the equilibrium zone as well as below the Gaussian channel, both of which are bearish. We have the strong bullish divergence forming right here on the charts, which could be signaling an area where we could see price turn around and potentially challenge this equilibrium zone once again. You can see right here that when price broke through, it did come up and challenge it here, failed, here, and failed in the top quadrant, and continued trading within this wedge pattern, as you can see. So price has basically been coiling up like a spring right here for quite some time. There's a good chance, as we're thinning out to this point now, that we might see a move to the upside, challenging this equilibrium zone once again. Keep in mind that the equilibrium zone on the 4-hour is quite a bit different than the one on the daily chart. So what we would want to see first is the price getting through this equilibrium zone on the 4-hour, then moving over to the daily chart once that has occurred. But this bearish order block up here likely won't be easy to get through, but it's certainly not impossible. But at the same time, with my charting techniques, a lot of times what you'll see is what happens above will happen below. And as you can see right here, price broke out through the red zone to the upside. If you look at the chart here, price has not touched the red zone. A lot of times these will be equidistant. So seeing how much we've moved out of the zone here, it's very likely that we could see that exact same thing moving to the downside in this area here, taking out this weak doji reverse waterfall, which would put us right in the range of that breakout point that I was talking about on the daily chart, which is resting down in this area right here. It makes a lot of sense. It seems like to me there's a very likely chance that price, in order to match what we're seeing here, could come down, taking out all the liquidity out of this bullish order block, coming down into this area, taking out this weak doji reverse waterfall in the 4-hour charts, absorbing maximum liquidity, faking out to the downside, breaking out of this wedge, then reversing to the upside, previous to challenging this equilibrium zone. But it doesn't necessarily have to work out that way. We could move up and challenge this equilibrium zone first, get rejected, then fall down. Or we could come to the downside, clear this out completely, then move to the upside. It would actually probably be better if price broke to the downside first, then moved up. Taking a look at the heat map, it doesn't really offer us as much information as I would like, but you can see that coming from this area right here, which I was talking about on the charts, the biggest band of liquidity is resting towards that previous breakout zone in that area, with a nice thick band resting right here of liquidation liquidity. Basically everything has been cleared out to this point. So looking at this chart, you can see that the lowest bands are right here and here, with very little liquidity resting up above it, which makes it lean to the side that it's likely it will come down to these areas first before breaking to the upside. In order to get any of the buy-side liquidity off of this chart, price is going to have to move up considerably because the thickest band on this chart is resting right in this area, which is considerably above current price. When taking a look at the cumulative liquidation map, we can see price right here at the red line, that there's really not too much liquidity resting on the long liquidation leverage side of the chart. And the vast majority of what does exist is on the short liquidation leverage side above current price. Everything in the red going this way is below current price, and everything in the green moving this way is above current price. And you can see by looking at it, it's very sparse within this area. So there's a good chance, just factoring in efficiency, that we could see this getting taken out first, then moving in to where the algorithm would start chewing on all of this buy-side liquidity, gradually moving price higher. When you're thinking about things in terms of the algorithm that runs the markets, you need to think in efficiency, because that's the language that the algorithm speaks. So all in all, looking at these charts, there's a case to be made that it seems like it's very likely we could see prices move to the downside before moving to the upside. And if we do move to the upside, there's a good chance it could be a fake out. What we want to see is price on the 4-hour charts getting up and above the equilibrium zone, which is an incredible sign of strength, as the equilibrium zone acts like a magnet, drawing prices towards it and repelling price from it. So we need to start stacking some bullishness into these charts by taking out the gaps, filling the volume imbalances, sopping up the last little bit of liquidity that is resting towards the bottom of the charts. Then we can start to make a case for the bullish side, as price will flip from chewing on the sell side liquidity to seeking after buy side liquidity, moving price upwards. But all in all, sitting at the bottom of these charts, this is the time where you want to be accumulating. You don't want to wait for the breakout to occur and then start chasing price. You want a dollar cost average in, be patient, and wait for those breakouts to come, so when people start to chase this sparse liquidity moving upwards, you can act as the market maker yourself by selling them your coins which you purchased much lower. You want to be buying into that weakness and selling into the strength, not chasing. So I appreciate everybody participating in the Viewer's Choice video. There will be another one coming up shortly. If you do see it, please do participate. And thank you so much for watching. I appreciate each and every single one of you. Have a great day.